Good morning, everybody. Welcome to the Flow Show, Friday the 14th of November. We're pretty much halfway through the month already. Soon be Christmas, and yet at the end of another week. And some fun and games today in the pound and all this budget crap that's going on. And some good price moves going on around town as well. So we'll look at all those shortly. Morning, Kate.
Morning, Ryan. Morning, everybody. Yep, TGIF. We are ready for the last straight of the week.
Yep, it's probably going to be a bit bendy. Don't know about straight. That's what markets seem to be at the moment. Anyway, right, let's get started. Going to start with some Chinese data from overnight, if I can find it. Where is it? I'm not even in the right date. Thursday, Friday. Where are you, Chinese data? There you are, down there. Right, retail sales came out positive at 2.9% year on year. Was expected to dip to 2.8% from a prior 3%, so we came in a little better than expected, marginally down versus number last month. Year-to-date sales came in at 4.3% from 4.5% previously. We had some industrial production data, all there or thereabouts, year on year. 4.9%, a bit worse than was expected versus last month. And the year-to-date number as well, just a little bit worse. Overall, though, not too bad. Data unemployment came in at 5.1%, although the only real negative you could look at is that CapEx number, fixed asset investment, coming in worse than expected, down 1.7%. The Chinese Stats Bureau says China shows trade resilience as global protectionism rises, and it vows to stabilise trade and assist firms under significant pressure. We also had PBOC's Tao speaking, says the yuan appeal is rising globally, and they're going to continue improving the yuan's infrastructure and to promote yuan use in trade and cross-border financing. Says still need to increase investable yuan assets. Says still sees a long road ahead for yuan internationalisation. But Kate, I just want to ask you that they're talking about, obviously, they've been saying this for a long, long while about getting the yuan moving. But these comments that its appeal is rising globally, could that be a little bit of a wash over letting it strengthen? They could explain it and say, well, it's not us letting it strengthen at the moment. It's people buying it up.
That's also one of their aims. They actually succeeded already because a while back there were some reports about, especially Asian countries, of course, diving a little bit deeper into the yuan, but to get to a broader audience than some South Asian and Russia, obviously. It's going to take a while. I think I'm not sure that US investors, although they have apparently showed some interest, even I think was one of the biggest asset managers in Europe as well re-entered China in a smaller way. It's all part and parcel of the economic warfare, I guess, and trying to beat or at least challenge the US mainly.
Yeah, exactly that. Exactly that.
But I don't completely disagree. I'm actually a bit, for a week or so now, a bit short dollar, or a small week short dollar China, because there are like various reasons. It's clear that China also came out victor of those trade talks as well. But yeah, I mean, it's still a bit fragile to dive completely or more heavily into China, I think.
Yeah, absolutely. Right, over in Japan, the Growth Strategy Minister, Kiuchi, says economic measures should focus on necessity, not scale. So almost wanting to keep the bazookas fairly small. Some unfortunate news for BOJ Deputy Governor Uchida. He's in hospital. Unfortunately, he's got leukemia, so he's being treated for that, which is going to put him out of action for a few weeks. So I don't know how that affects the next BOJ meeting if he's still out of the running. We'll have to see how that turns out. But more importantly, let's hope he makes a speedy recovery. SNB's shooting says rate cuts are stoking the credit growth as intended, i.e. lower rates gets people borrowing a bit more, firms and whatnot, and putting that to use to hopefully get the economy going. They've got their, they're progressing on their trade deal stuff. They were focusing on all these tariffs and everything, and apparently they're going to be opening up or planning to reduce their deficit with the US, and a senior US official says talks are going positive. So we'll wait to see whether they get the full-on Trump treatment in a signing up. Bank of England's Green, her reign of terror is going to continue for a second term. She's been reappointed as an external member of the MPC, so she's going to stay in her hot seat. Let's get into the UK stuff. Reeves yesterday ploughed into the weak GDP numbers, saying it all reflected the JLR, Jaguar Land Rover cyber attacks, which crunched auto production and sales. So another excuse out the hat. But late last night, the FT dropped a bit of a bombshell that both Starmer and Reeves are going to drop their plans to raise income taxes. That all developed further this morning, saying that that decision to drop those income tax rises came due to improved UK forecasts, which would have been given to her by the OBR, which means that she would only need headroom of 15 to 20 billion, far lower than the 30 plus billion everyone thought she would have to dig herself out of. So that means she doesn't have to find as much headroom. She doesn't potentially have to do so many tax hikes. However, she apparently is still going to look at lowering income tax thresholds. So there's several, well, more than several items of mess going on with this one. Firstly, this is all rumours so far. Everything's been rumours so far since this all started. Secondly, this is all, if true, based on OBR forecasts, and they're about as good as forecasting the sun coming up. That makes a mockery of that, because they have briefings, ongoing briefings and forecast updates. I don't say they work in partnership with Reeves, but she would have known some of this a while back, depending on what forecasts they gave her. It's all part and parcel of the process. And it also makes a shit show of that emergency presser she gave a few weeks ago, telling everyone that everyone's going to have to do their bit. And now we might not have to do as much bits as what she said. So the long story short is there's two things. Okay, if she doesn't have to find as big a black hole, doesn't mean she has to raise taxes as much. If she's not going to do it via income tax, she's going to go pinching it some other way, which could be a bit more of a mess. Thresholds, other tax hikes and whatnot. So we're not out the woods as far as that is concerned. And there's the fact that whatever she does, whether it's filling a 15, 20, 30, 40 billion black hole, none of it is likely to still be positive for the economy moving forward. So the pound got a bit excited this morning on the tax cut news, but then I think it's come back to the realisation that it's still going to be a shit show moving forward. So long story short, it is possible that we've now finished with all the sell rumour part of the show, and we're into potentially the buy fact part of the show, where the pound may not be as weak moving forward. I'm not saying it's going to rally to kingdom come, but we might have just seen a little bit of a shift in sentiment now after that news. So be very careful with the quid from this point forward. Kay, what are your thoughts on that?
Hmm.
And you can pass if you want, because it is a complete shit show as usual.
No, but the thing is, the reactions in the market are not. I'm not going to say bizarre. I mean, if she drops the tax hikes, all of them, it's obviously not going to bring in money into the coffer, so that's going to be bad for the pound. But then the reasons why and the less of a hole to fill, that was kind of already new at the start of the week, and it's just on the back of some articles putting that and the FT article of last night together, reacting, and it seems like we're in uh, constant overreaction to small, as you call them again, rumors and algos algos taking people for a walk. No, what I think about all this is that we shall see, but if she doesn't hike income tax, we are going to pay another way. Thresholds being lowered, tax breaks being abandoned. There was already, and this is a very small one, of course, but there was already talks going on about those cycle to work thing, buying those bicycles, which have been quite popular as a scheme. That there because people are taking the piece, of course. There, the cap is going to be lowered quite significantly, but there's going to be plenty of those little measures, I think, which altogether would actually mean roughly the same as a tax hike if she doesn't go with proper clean tax hikes, right?
Yeah, but she would have to go a lot more of those sort of programs,
Hmm.
rather than a tech site to get that sort of money in. It's
Oh yeah.
the bigger money grab is in those tax
Hmm.
hikes, which makes a mess because it just means all little taxes keep going up and whatever.
Yeah.
But on the other side, and this is something I've been saying right from the get go when all this started. This is how it works in the UK. They float these trial balloons. We could be in a situation where she's floated all these programs, tax hikes, all the bad news, and then hey, all of a sudden, it's not going to be as bad as that. Which then it's still going to be bad news, but it's like saying, well, the bad news isn't as bad as it was before, and everyone thinks that's good news. That would be politics in a nutshell. So you just never know with this sort of stuff. But we will find out on the 26th of November, one way or the other. And we can't rule out anything in the meantime in terms of headlines and whatnot. But anyway, let's move on from that. We got some inflation data out from Europe. These are final numbers for some, or for most of them. France, pretty much confirming they're still in a pretty weak inflationary mode. HRCP coming in at 0.8%, CPI coming in at 0.9%, so lower numbers there. Spain, they're pretty much on the other side of the coin. Their inflation's above 3%, 3.2 in the Eurozone measure, 3.1 in their CPI and their core as well, up at 2.5%. So some inflationary pressure there. The ECB happy, as they say, to let things meander around their target. But if things go too far one way, then they might be forced to act. GDP out of the Eurozone as well, coming in at 1.4% year on year, 0.2 quarter on quarter. So they were thereabouts as before. Nothing else of note from that lot. There was a bit of a piece put out by Germany's Der Spiegel News with the headline, Bundesbank President Nagel believes he can succeed Lagarde, which you could read in one vein to say he's maybe putting his hat in the ring. But when you read the story, he says, in principle, any central banker on the ECB Governing Council should have the competence to succeed to the top post. So he may have ambitions, but he's not coming out and directly throwing his hat into the ring, but making subtle noises, shall we say. Fed's Daily says uncertainty has come down quite a bit in the US. It's premature to say We're definitely going to have a cut or no cut. Well, premature to say definitely a cut or no cut in December. Also weighing in on the potential Fed bond buying, says there is not a correct size for the balance sheet. Fed's cash and carry says inflation is still too high at 3%. He wanted to pause in the October meeting. He's undecided on whether to hold or cut at the moment on the December meeting. Fed's Hamak says the jobs market looks balanced right now, but sees reasons for concerns. Another one on the balance sheet says probably won't be too long before the Fed expands the balance sheet again on technical factors. Fed's Musaliam says supported rate cuts so far to protect the labour market, but the Fed needs to proceed with caution now. All that given, Fed rate odds have dropped for December. We're now below 50% in terms of market expectations on whether we get a cut or not. That's where we are. It's going to put us right on the line, which should be good for volatility if we're 50-50 going into that meeting. We had another bond sale last night, 30-year, not a huge one, pretty similar to what happened in the 10-year yield. Bid to cover down a bit at 2.29 versus 2.38. Directs dropped quite a chunk to 14.5 from 26.9, but those all important foreign investors and institutions picked up the baton with their percentage rising to 71 from 64.5. So yeah, pretty okay on the face of it. The BLS finally went to work yesterday. They switched on their website. They put up a little notice saying it may take some time to assess the situation and to finalise release dates. They say new publication dates will be announced when available. So we're all hitting the refresh button on the BLS calendar for a while. Everyone else is still trying to guess when this stuff's going to be released. Hassett, though, gave a little heads up. He says we're likely to get the September jobs data in full next week. After that, we should be able to get the October NFP, but not the unemployment rate. How they're going to deliver that is anyone's guess. He reckons the shutdown will cost the economy 60,000 jobs. And then another funny story popped up yesterday from Reuters sources saying that European bonds are apparently thinking about pooling dollars to reduce their reliance on the Federal Reserve. However, further in the story, it says officials' concerns rose around April and then receded due to Fed's assurances. So that's up in the air. Kate, it must be at the end of the year we start getting the dollar liquidity shortages stories floating around.
Yeah. It's again one of those stories. We will see, because the amounts picked up at I think the repo. So I've been coming off. So for the time being, the market is tough to say that they are not worried, because it's again this thing. We are now waiting for data to see, and if data go really badly, I guess we are going to see a bit of a reaction in the bond market as well. But they could be pretty naughty, I would say, because if you get bad data, jobs and perhaps others, if you get bad data, yes, the dollar will get a slap. Yes, the yield should come down because it's bad for the economy. But if that also all of these data let shine through that the U.S. government and Treasury are not doing well, you could have all of a sudden a snapback, and the bonds also crapping the bed. So it's going to be. And again, I've been saying it yesterday as well. I think the big money managers are just waiting for data to drop, to update their models, and then we will see moves, and we will see changes in the expectations for the Fed, and even the Fed heads, right? They are waiting for it. It's pretty clear. I mean, most of them are on pause, but most of them are also saying that if the data come out in the one or the other way, we could change our mind as well. So everybody is again on the same line of we don't know what's going to happen next. We have seen a reaction after Hasid said that the numbers would come out. The market is clearly thinking that it's going to be negative for the dollar and US markets. We have seen the equity market crap out yesterday, seen the dollar losing some steam selectively, because other currencies have been more sensitive to risk than dollar moves. But I think we're going to see this kind of markets that we have seen yesterday, the days before. We're going to see the continue this kind of yo-yo probably into the release of the data, and then it will be the market to decide whether those data are strong enough as a how shall I say, there's enough depth in the data to really form a strong idea about the next Fed meeting. So it's all up in the air basically, right here and now.
Yeah, absolutely. But as far as that story is concerned, it's the same old stuff we get. If it's not from somewhere, it's not from Asia, it's from somewhere else. And yeah, when it happens, it happens. We'll worry about it. Mr. Trump, he'll be keeping an eye on this. His approval rating stayed at 40%, but his disapproval rating climbed to 58%. I don't know how that works. The other bit in the middle must be everyone that's not bothered. According to a latest Reuters Ipsos poll, apparently 44% of Democrats say they are very enthusiastic about voting in 2026 versus 26% of Republicans. So that's going to be one of the big things next year, the midterms. It's sort of just marking the scorecard, if you like, for Trump in his first 2 years. So that's going to be one of the big events of next year. And Trump will want to be going into that strongly. Right, that's all I've got as far as the news is concerned. Have you got anything else, Mr. Key?
No. Let's move on.
Yeah, let's do so. So still no data today on our Friday. We don't mind that. I'm actually enjoying not having all this US data, Kate. It's just, I know we're missing stuff, but it's nice to have the peace and quiet for a bit.
Yeah, and I would actually also say that it's not easier, but it may even be just even though a lot of stuff is in a yo-yo, it makes the yo-yo tradable anyway. So it's not that bad, because
No.
if you don't have data, you don't have gaps, and we especially us as retailers, we depend on how good our liquidity providers are, and if you have data coming out, you more than likely miss it, the better entry. So having less data when something happens, it gives us more time to get in.
Yeah, that's true. Yeah, I mean, we're fundamental traders, so we want that data so we get an idea of what's going on. But it's nice just to not have to worry about what's going on for 5 minutes. But yeah, it'll be back with a bang shortly, no doubt. Right, Ali, you've put a lot in there, and it's a lot to read through. Okay, I'm not going to get into deep dive into your analysis, okay? Because I can't get clarity from what you've written. No offense, mate. And you know where you are. If you want those sort of conversations, you know where we are to have those in good time, in a good environment. You know where they are. So I'm not going to do a deep dive into your analysis on a Friday. Right, let's get cracking into some of the prices. So euro sterling, it ran up to my next zone, which is an age-old zone going back many years. We tapped it, and then, well, by luck or by judgment, those headlines decided to give it a knock all the way back down. I don't think we're out the woods. I'm not going to say that this is going to be heading all the way back to 86 on all this news. As I said, yes, people may not be losing an arm, but they're still potentially going to be losing a hand in this budget. So it's still bad news, just maybe not as bad as we were potentially expecting. It's going to be important, I think, what happens from here. If we start getting a sustained period of banging our head up here, that would further indicate we might be just starting to move sideways a bit as we head to that budget. But also, we can't forget what's going on the euro side as well. And with the euro having a decent run up yesterday, there is some influence from that side as well as the speed difference between cable and whatnot. We did hold the dip into 88.10s. I think any area from these prior highs, 15s, 17s, down to the figure is going to be important in the short term. If we're breaking under 88, 87, 90s, maybe there's been some other headlines and we're going to let some air out the tyres a bit more. But otherwise, I'm still happy to be long. I still think for the foreseeable future, that's the right way to be. And I'm not going to change my mind on that. Though I can see the prospect of this budget, as I say, being sell rumour buy fact for the quid. So I would not be surprised if we see a bit of pound strength after that budget. But I'm going to see where that goes on that. You got any thoughts on this one about where it goes next, Kay?
I'm happy to have taken some off on that rally, but I've taken a bit too much off, so I actually bought some back at the start of the show. So no, I think don't change anything to the plan because the plan hasn't changed. A lot of headlines and a lot of a yo-yo. But when the dust settles again after those headlines that we had, we are trading around 88.40. We are not trading below 88. So the market hasn't let its opinion go about the sterling just because of a few headlines. So what we were saying before we had the data this week, I think still remains valid. The data were weak. That's still I would say the more logical side of sterling to trade. If we take away all those yo-yo moves, right?
Yeah, absolutely. Brian, I think that's a bit of if you're referring to Ali, I think that's a bit of an unfair comment you make there. We've always got time for people, as you well know. It's just the environment that we can put that time in. I don't think going over that sort of thing on a show that we've got hundreds of people listening to is very fair for those. So yeah, I've said my piece. Let's keep it at that. Right. Where am I going? I've lost my train of thought now. I was going to look at Aussie Kiwi because this one might be turning the corner in terms of what it's been doing. It's been on a very strong run since these lows down here back in April. Very, very strong one. We had 7 months of rallying. So at the moment, this is just a minor pullback in that context. But in the short term, we might have turned a corner. This move back under 115.90, 116 looked a bit significant. I was looking to see if we got a retest of that level, but we never got that far, only by a few pips, but that was enough. And it's been downhill since then. So I think this has certainly maybe solidified what's going on up here. So watch the rallies from this point. If it is just a pullback, we will go and take out these levels pretty easily and then maybe go and take out the high again. But if we fail at anyone, probably this area is probably looking the strongest ahead of this big one, then that will indicate we've got a bit of a top in play. And I may look at shorts on that one, but I'm kicking myself a bit for being a dick for a tick when I was watching this in here yesterday morning and we just weren't getting up to that level there. Dollar CAD, that's had a little flipperoonie as well. Didn't quite get down to this level in the end, but another pendulum swing for the dollar. It was looking crap yesterday. It's looking a bit better today. And we're back up. We're back above this 15-20 area and holding it. And now we're trying to climb back above this 30-40s area. Not quite. Well, you could say we're maybe just about holding it at the moment. So again, maybe this one just goes into a bit of a pullback mode before we go head higher again. But there's plenty of levels in the way of this one. Dollar MEX, that didn't quite get down to test the lows down here. Again, we've got a bit of a bounce, pretty much close to that prior low there. It's managed to get its nose above some of these levels, so we're pretty much back in the middle. I don't know where it goes from here. You've got any idea about this one, Kay?
We just didn't make it down to 1820. I'm just still having the same reactions as or the same thought about how it was when we are turning around 1850 again. You've got those 2% moves up and down, or roughly around 1850, and then a bit of a lack of follow through. It is still a bit linked to risk as well. If equity markets come down, we have seen the bounce. We have seen exactly the same happening on the dollar rand, which was the rand was trading extremely well for a good while, and now it's jumped 1% relatively quickly as well. I think a lot has to do with how risk is perceived right now. But on the mix, yeah, I wouldn't push for anything right now. In the medium term. Shorter term, I think that range, if you look at it, you've got your blue box below 1850, and then you might as well put like I don't know, a green box above it. But you trade either in the underside of that range that we have, or the top side of the range that we have. That's how I kind of look at it right now, because you have a pretty decent, if you look at September, August, whatever. Yeah, we had a few spikes, but it's a pretty decent little play there above or below 1850, it seems.
Yeah, it's amazing how these levels become really, really important. You look at this on a monthly basis and it doesn't look like much, but when you go into, let's go into a nice clean one. You look at it on a weekly. All this action on the weekly basis took lots of different days, pinging it, jumping, being above it, below it, whatever. All these weekly moves, you had intraday action against there, and this is doing the same thing here. This is just a key level, and as I said, you could clear everything off your charts and just trade that level, whether you're above or below, holding or whatever. It really is a doozy of a level, and for months and months we've been trading around it. Still no decision which way it wants to go in terms of a next big move. It's sometimes the ticks are amazing on things like this when you get such clarity. Euro Swiss, that's looking very iffy at the moment. We're having this, we've had a break of these lows. We've now had fresh all-time lows in this one, and it's looking a bit dodgy at the moment. We went below, we got back above, we've just had a little look below again. So it's very undecided what he wants to do here. I was looking at a long as we were coming into it, but I left it. But I have taken it when we got back above it. Whether that proves to be a good trade or not remains to be seen. But I've set my marker on a stop just below this day's low here. So it hasn't followed through as yet, and I'm not buying it on hopes that the SNB come in with their palette knife and start trying to smooth stuff. But the price action, it's had a little flash out and now it's trying to get back into it. So I'll see what it does from here. Kay, I know you were thinking that if it goes, it might go bigly. It still could do, but what do you make of the price action since the break?
Well, is it the inverse yen? I think moves below could drag SNB into the frame. We're also seeing like dollar Swiss that was really pushing down. They should, if I'm not mistaken, they should be close because it was expected for yesterday or today, signing that trade deal with the US, and then we may have a reaction in Swiss franc as well, because the market is clearly been buying Swiss franc on the improved conditions of the trade deal surrounding tariffs. I still want to see If it's a blanket one, because we didn't get the confirmation, a blanket 15% deal, I would assume so. Otherwise, they would have said differently around pharma, because pharmaceuticals are big in Switzerland, right? So, but it seems that the Swiss have promised to do something about their trade relation with the US. That was the line yesterday. So it's all being taken as positive for the Swiss economy, which would be obviously supporting the Swiss franc. And lastly, about the Swiss, I want to see, and I haven't seen it yet, what the central banks did in Q3. We know that in the first half of the year, they have been incrementally increasing their reserves in Swiss franc from extremely low levels. We need to be precise about that. They are nowhere near even levels that you could imagine in sterling or yen or something like that. If they would have, it's still extremely small. But looking at those moves and looking at how Swiss franc has been so resilient when risk was flying, I mean, we hardly had like a percent move or so from the lows, which is nothing if you look at how risk has been behaving well before the setbacks that we are seeing. But I wouldn't really be surprised if they were just continuing to buy like little bits of Swiss here and there,
Yeah,
because they are very long-term decisions. They are not like us traders who buy dollar yen at 154.70 and wondering whether in the next 10 minutes it's going to go to the figure or back down to 40. And those people don't think like us, right? And they don't build their reserves up like traders. It's a completely different thing. So I'd love to see the numbers again. But yeah, whether it goes fast or not, it's going to depend on the SMB. I think they will. I don't think they will like what they are seeing right now. So, and even though the new one, Schlegel, is not as interventionist as Jordan may have been, by no, by, he's not at all. I still think that they will show up at some stage. The thing is for markets, and just to repeat, is that they do not, unless it's going to an extreme situation, they do not go in the market and buy Euro Swiss. That's not an intervention that the MOF in Japan does, right? They just go sit on the bit and slow moves.
yeah, yeah. And I was looking at this dollar Swiss, and I'm thinking whether this is the one they're looking at rather than Euro Swiss, because this one, if this one starts to break those lows, given what they're just doing with the US, that might be something that they look at. So we could see Euro Swiss sliding, but as long as this one's holding up, they won't go or look to do something until this one starts breaking down. So I'm just wondering if I'm in the wrong pair, maybe, and maybe I should be long this one rather than long Euro Swiss. I have to have a little think about that, I think.
Or
Anyway,
join
yeah,
join the army of short Swiss yen traders, mate. I mean, you never walk alone there. Never.
I ain't getting on that roundabout. No way, Jose. Right, knock it over,
Uh,
mate.
yeah. Ali, what happens after the 10 days? If you go onto our website, it's not because you take whoops, it's not because you take that trial for 10 days that you have to enter a trader funding program. Just click on there's a feature on there which has pricing. Just look at what happens after your 10 days. Okay, I mean, you do not have to take a trader funding program to enter our community. Okay, right. Aussie, and we have to look at the Aussie. Not only because, well, Aussie Kiwi has also reacted strongly, but this is, and I would say perhaps together with Norwegian kroner, is perhaps the best proxy for risk and especially then risk if you look at commodities and equity markets, right? This is probably the best proxy for risk in the FX market right now. On the other side, we may find well, things like the Swiss but also the euro has been extremely resilient. But the Aussie could not hold the better jobs report rally, just because it is now again very sensitive to what's happening in risk, and especially I would argue when it's risk off. Okay, we've seen this drop. I suppose there is positioning as well. People liked to be long the Aussie, including myself. But yesterday, when it came back down below 40 here, yes, last night I just let it go because I was looking at the equity markets, not finding it very funny. So I'm just out of my Aussie now. And the fact that we are below now 65, 14, 15, which was the bottom end of our the range that we started on Monday, does not look good. Obviously, it can be a false breakdown, but it does not really look extremely good. I'm just looking across at what's happening in the equity markets. They are still slipping. It's really trading with equity markets. If you want to know what's going to happen next on the Aussie, look at the equity markets. And being Friday, I'm not inclined to start catching a knife here unless I see um, those equity markets turn around on this Friday. Okay, but it will likely be an intraday play. I'm not planning on holding much over the weekend, actually, apart from my euro sterling, and then the one that is going to be a slower mover, I reckon, that dollar China. So. Yeah, this one looks a bit in danger. Could get back down below the figure, and then here that zone 84.60, 84.80. Don't forget the longer, the more medium term one around 64.40. It's going to have to drop a lot, those Friday markets to get down there. But who will say that we can't? So for the time being, I don't like to be specifically looking at buying this dip, and I think Ali, you were looking at that as well on the Aussie dollar. It does not look great to me. Let's just put it that way. Euro dollar consolidating the break, but it's still a break within everything that we have seen here. Okay, so break small break, but the euro has been very resilient on the crosses, so this pair is still perhaps not the best one to trade risk off. If you think risk off is going to support dollar for some reason, I still don't think it's the best one, but it's coming back from the halfway line of this move higher. So, and it could not reach the prior top around 116.70 yesterday. So that's maybe enough said, and we are going to settle more in a range. I wouldn't actually be surprised if we get back down 90 figure and then trying to figure out what's going on. Okay, we need to talk about the metals, obviously. If you, and this is something that maybe it's not a secret or whatever, but if you want to know, especially for corrections, if you want to know what's going to happen to silver and gold, look at platinum. This is now the third or the fourth time already that platinum was the leader, the initiator of the move lower in or the correction moves in all the metals basically. And yesterday it started in our morning, and then all of a sudden silver dropped off a cliff from very close to the all-time highs again, and then later in the day we had to wait until New York really came in for gold to start following the move. Okay, and with the equities also dumping. Just again, I mean, if you want to know when those corrections, and I would say especially in corrections, if those corrections set in, keep an eye on platinum. Once it starts to move more than 1.5%, it does look like it drags all the rest with it. So gold here, we're coming onto a bit of also already overnight or yesterday evening, sorry, in our time afternoon in New York, we came onto the level here from which it bounced. We're back onto that level. Let's see what New York wants to do with it. Does look a little more fragile than the prior days. I know, and also being Friday, I'm not going to really start something afresh. but just know that between here and then maybe 40.95, 41 via 41.30s, we could see a bit of a deeper correction. But obviously, if it starts to hold here, then it's going to build a solid base as well. And then I'm specifically thinking about next week, okay? And next week we should have data coming in. This one also should be trading this one. As I said, silver, big rejection of the very close to all-time high move that we had. We're hanging around the 23.6 of that move. Also here, potential for a bit of a deeper move, but silver is, even though percentage-wise is doing the same, but being a smaller market, relatively speaking to gold, it still looks to be holding a bit better. So I may actually be more inclined to buy dips here now in this one than in gold, if I would do anything before the weekend. Okay. Michael, you were asking about the S&Ps, right? The danger zone for me is at 66.5, 66.55 around. We are just trading on the 6700. Look at this. This is from August over October, November. We just didn't manage to get there, but close enough for government work, as some may say. Maybe I really need to. No, it's pretty correct. 66.5, mate. If it starts to get back down there, pay close attention. Okay. That is one where you will need to pay attention. If we close the week, above, I would say above this one here, above 67, 60, 65, that should be a bit positive. So we have about $100, about $100 range here to monitor. Okay, that is what I'm thinking about the S&P right now. And with that, Ryan, back over to you, mate.
Thank you very much, sir. Good stuff as always this week. Fred, just on your earlier question about South Korean intervention, I believe that was just verbal. They didn't intervene. If you're trying to tie it up with what happens in Japan, don't. Two completely different countries, situations, even irrespective if the country's doing the same sort of thing. So don't look for connections that aren't there. The Japanese will do what the Japanese want to do when they want to do it, irrespective of what others are doing. Anyway, thank you everybody for coming to the Flow Show this week and your continued support here, keeping us going week in, week out. I hope you had a good week. Don't finish it off with a bad Friday. Have a great weekend, and we'll get back up and running next week. Thank you very much.